comparing the standards of Ukrainian banking legislation to European standards. Conference on Business, Accounting, Management, Banking, Economic Security, and Legal Regulation Research. Banking should be carried out exclusively on a legal basis, and the shortcomings of the legislation directly affect the operations and condition of banks. That is why this study is based on two areas of specialties and covers the fundamentals of law and the banking system. The main legislative acts regulating the banking system in Ukraine are the Constitution of Ukraine, laws of Ukraine on banks and banking, on the National Bank of Ukraine, on payment system and funds transfer in Ukraine, regulations of the National Bank of Ukraine, and others. Banks as economic entities fall under the general effect of economic laws that apply in any civil society. In order to achieve their own goals, the relationship of banks with other elements of the financial market create a unique market mechanism called the economic system. A detailed analysis of the current state of the banking system of Ukraine shows that the basic goals, including high reliability and profitability, competitiveness, and a high level of customer confidence, unfortunately remain unfulfilled. And it is no wonder, since the current situation is characterized by the presence of a global economic crisis intensified by the effects of COVID-19 and the inclination to deepen European integration. As of the 1st of June 2021, 73 banks were operating in Ukraine. Also, the analysis of data for the last 10 years shows that as of the 1st of January 2014, their numbers was 180 banks. In fact, there was a sharp decline in the number of banks, their so-called bank failure, as some of them were considered problematic, insolvent, and fraudulent, and those that do not provide information about the final beneficiaries. To do this, the regulator had to initiate changes to 20 regulations and improve laws that helped clean up the banking system, make it clearer, which should increase public confidence in the banking sector. One of the most important ones was the Law of Ukraine on amendments to certain legislative acts of Ukraine regarding the responsibility of bank-related entities. It introduced criminal bringing the bank to insolvency. Despite the fact that the number of banks decreased, the financial result of the banking system improved. There is also an increase in capitalization and sufficient liquidity of the banking system. In order to ensure sustainable development of the banking system, it is necessary to take law measures to ensure proper legal regulation and reform in the sphere of banking services. This is why the Cabinet of Ministers of Ukraine approved the Ukrainian Ministry of Finance's proposal for a strategy for reforming the state banking sector and endorsed the principles of strategic reform in the state banking sector. According to these principles, the main objective of public sector bank reform is to create and maintain a reliable and competitive banking system, a significant part of which is expected to become private in the future, as well as to achieve high efficiency of the entire banking sector. This objective covers several key tasks. The financial results of state-owned banks aimed at ensuring and guaranteeing their stability and long-term maximization of value, and significant reduction of state concentrations of Ukraine banking system. During the implementation of plans for the state to take over the ownership of banks, it is planned to reduce the part of the state in banking sector from 55.9% at the beginning of 2021 to below than 25% by 2025 and increase their value. The state should refrain from strategic projects that require an increase in the part of the state in the financial sector, including the creation of new state-owned banks or the historical participation in the capital of banks, which could increase government spending. The chart shows the ratio of the number of banks and their assets. We can see that 52% of the assets of the banking system are state-owned, although the number of state-owned banks is only 7%. In recent years, Ukraine's banking sector has faced a high level of financial and economic instability and a large number of borrowers who have actually defaulted on their loans. Although a part of non-performing loans has been gradually decreasing since 2018, as on the 1st of June 2021, in Ukraine it was 37.8%. A part of non-performing loans in the loan portfolio is the highest among state-owned banks. The highest NPL rate on the system in GACCB Privat Bank, 71.8%. But since GACCB Privat Bank became state-owned only at the end of 2016, the financial problems arose earlier due to fraudulent activities of its ex-owners. These data are not indicative. However, GAC State Saving Bank of Ukraine has at the beginning of 2021 45.7% of non-performing loans, GAC Ukregzimbank 53.6%. In general, banks with state capital have an NPL of 40.6%. For comparison, in banks of foreign banking groups, NPL is from 2.3% to 38.1%, and on average on the 1st of June 2021 is 10.3%, and in Ukrainian banks with private capital 12.4%. It is known that the National Security and Defense Council extended sanctions against two Russian banks, Prominvestbank NPL 95.6% and Sberbank NPL 85.4%, and banned the withdrawal of capital in favor of persons related to banks. The regulator, represented by the NBU, has no legal basis for terminating the activities of Russian banks in Ukraine, but the Verkhovna Rada of Ukraine and the National Security and Defense Council have the power to limit the presence of Russian capital. It is the People's Deputies of Ukraine who must develop and approve the relevant bill and finally decide the fate of banks with Russian state capital in the Ukrainian market. This should be a principled position given both the political and the financial and economic situation. Article 133 of the Association Agreement stipulates that the parties recognize the need to approximate the legislation of Ukraine to the law of the European Union. Therefore, in accordance with the provisions of the Association Agreement, Ukraine has agreed to make the necessary efforts to ensure the implementation of international standards of regulation and supervisions in the field of financial services and to combat tax evasion throughout its territory. Such international standards include in particular the basic principle for effective banking supervisions of the Basel Committee, the basic principles for insurance of the International Association of Insurance Supervisors, the 40 recommendations, and the 9 special recommendations for combating terrorism financing of groups to develop financial measures to combat money laundering. To improve its own banking legislation, Ukraine has agreed to implement the basic principles of effective banking supervisions, which in fact are the minimum standards for reliable prudential regulation and supervision of banking systems. The fundamentals are the necessary standards of reliable supervisory practice that are universally applicable. The committee established the basic principles, in fact, contributing to the strengthening of the global financial system. The shortcomings of the banking system of developed or developing countries may well be a threat to financial stability both within the country and internationally. The committee is convinced that the implementation of the basic principles by all countries will be an important step towards strengthening financial stability at both the national and international levels, while providing a good basis for the sustainable development of efficient supervisory systems. And there are such principles as responsibilities, goals, and powers, independence, accountability, resources, and legal protection of supervisors, cooperation and joint work, supervisory approach, methods and tool of supervision, consolidated supervision, corporate governance, and others. First, an effective banking supervision system requires the establishment of clear responsibilities for each agency involved in the banking supervision process, as well as measures to improve the level of corporate governance in banks. To address these issues, the law of Ukraine on amendments to certain legislative acts of Ukraine on improving corporate governance in banks and other issues of the functioning of the banking system was developed and adopted on the 30th of June 2021 and approved by IMF experts. It is provided for a clarification and expansion of the powers of the NBU and the solution of those issues that need to be addressed for a long time. In particular, for a long time there was an urgent need in Ukraine to clarify the powers of the National Bank of Ukraine in the field of banking supervision on consolidated basis to establish the bank's right to assess the availability of the required level of qualifications and ability to organize based on the result of such assessment is to require replacement of the board or board of the bank in case of their inability or ensure effective control and management of the bank within its powers. The adoption of this law is a very important step in bringing our legislation in line with best practices in the organization of corporate governance and risk management system in banks. The National Bank of Ukraine, the National Commission on Securities and Stock Market, the Ministry of Finance of Ukraine, and the Deposit Guarantee Fund form the Financial Sector Development Strategy of Ukraine till 2025, according to which an important task in the financial sector reform, and particularly in the banking system, is to increase the level of public confidence from 10% by 2025 to 60%. The disclosure index is also set to improve to 5.0, including the presence of a number of disclosure requirements, up to 5.0. The solution to this problem consists in reducing the state's participation in the banking sector and implementing this issue on the ground by making the appropriate changes to Ukraine's legislation. The quantitative limits of foreign capital present in the banking system should not be established, as it will be indicative of the prescriptive nature of the banking system regulation and violation of the European acquis. There is a need to develop projects and adopt a number of regulations on implementation of the Basel core principles. One of the problems of Ukraine's current banking system is a rather low level of public confidence. The solution to this issue should provide a course for the liberalization of the banking system, which is directly aimed at ensuring the protection of human rights, increasing the level of protection of information about persons that constitutes banking secrecy. Nadiia Doroshenko is Doctor of Philosophy in Economics, Associate Professor in the Department of Finance, Banking and Insurance. Her research interests are finance, banking system, international relations, financial and economic security, and investment. She is author of more than 50 scientific studies. Nadiia has practical experience in the bank and 20 years of teaching experience. Oleksandr Doroshenko is also Doctor of Philosophy in Economics, Associate Professor in the Department of Finance, Banking and Insurance. His research interests are banking, insurance companies, international markets, and foreign exchange transactions. Oleksandr is author of more than 60 scientific papers. He has practical experience in banking and insurance, and teaching experience of more than 45 years. Vladislav Melnychenko is master's student at the Vasil Karazin Kharkiv National University. His research interests are legislation of Ukraine, international law, and banking system. He is author of more than 10 scientific papers. Thanks a lot for your attention.